What's up, deal hunters? It's Donnie Corum, your foreclosure deals coach, and welcome to the Foreclosure Deals Coach podcast. This is the show where we discuss the mindset, tactics, and tools to become a successful foreclosure investor. Well, the once thought to be dead FHA just released a loan program that is going to change the face of real estate investing for the common man. I'm telling you, you're not going to want to miss this show. It's going to be incredible. Stay tuned. Hello, and welcome back to the Foreclosure Deals Coach podcast. I am your host and Foreclosure Deals Coach, Donnie Corum, and welcome to the show where we discuss the mindset, tactics, and tools required to find, figure, fund, fix, and flip a foreclosure deal right here in your local market. Yes, you can do a deal too. All you need is the foreclosure profit system, the system that walks you through every step to find a deal, analyze it or figure it out, fund it using my list of private lenders, fix it using my list of contractors, and flip it with my team agent at a substantial discount, resulting in a $25,000 or more profit to you just for doing the deal so you can move on to the next deal. Check out the foreclosureprofitsystem.com to get started on that. Let's hop right in today. A lot happening in the real estate market. We are seeing some big pickups in the market. The rate dropped about a quarter point. Not a big deal on the scale of things, but definitely trending in the right direction. I think the government is starting to recognize that they've got to do something to stabilize housing. They're not doing near enough. A lot of the pundits would argue that at this point, we are imminently heading towards a real estate crash. I disagree with that sentiment. I think we're going to see a massive turnaround right before the bottom, as the government is famous for. But, just in case I'm wrong, hold on to your hats. It's going to be an incredible ride to the bottom and then back to the top. Well, amidst all of the chaos that's taking place, what a lot of people have missed is some recent changes in the FHA lending environment. Let's start out with what is the FHA, short for Federal Housing Administration. If you go back into the 1960s when the FHA was formed, it was a entity that was designed to help first-time home buyers enter the market by doing low reduced down payments. At the time when they were launched, it was about 3%. Some genius in office, I think it was Bush, increased it to 3.5% back in, I want to say, the early 2000s era. And that's where it has remained since. About 3.5% is what you are putting as the down payment, and it allowed for buyers who normally needed 20% down to do a deal, whereas now they could do it for only 3%, allowing for the dream of homeownership to be more attainable for people who needed to save up a larger down payment. So great program to help first-time home buyers, one of the staples of the real estate industry. But to be honest, they added mortgage insurance premiums in the recent years, probably in the last 10 to 15 years. It's been a while, and it made FHA, because of the mortgage insurance, less than viable. Suddenly, conventional loans looked more appealing because they had less insurance requirements and the down payment was similar, not quite 3.5%, but there's a lot of conventional mortgage payments down to 5% down, which helped out. And the mortgage insurance premium was much lower. Mortgage insurance, to explain that to you, is the policy that you pay to the lender. So if you default, all these people are contributing to the mortgage insurance premium or private mortgage insurance, allowing the lender to recover the losses on the deal from the insurance rather than from the borrower. So it made these loans more palatable to banks, okay? A lot of people wrongfully believe that the FHA is a lending institution. They are not. They're actually an insurance company, a government-backed insurance company that is insuring the loans against loss from the banks, again, allowing more homeowners to access property at lower down payments, and just a great idea to provide more stability to the market overall. Well, here we are with the market slowing down. The FHA has been relatively dormant for the last couple of years because, as I mentioned, their lending guidelines and mortgage insurance premiums make them a little less than desirable in this marketplace. So now they've released this concept where you can borrow money and then borrow the rehab money. And that's usually what keeps people out of doing deals. And it's so funny because I'm doing a deal right now in Scottsdale, Arizona, literally closed today. Okay. And as we're closing on this deal, I originally had enough capital to buy the deal. which was awesome with a private lender, to finance in the repairs, right? In this case, about $60,000 we were going to spend on repairs. And then they were actually going to finance 6 months of my payments into the deal, making this a sweetheart of a finance deal. There's no way I could say no to this. And I bought a great deal. We bought the house for $654,000. It is gorgeous. You guys want to see it? Want to see it? All right, I'll show it to you. Let's do it. I'm going to bring up the Matterport tour right now while we're chatting. But we got this house for a song. $650 is what we paid for it. Okay, $654 being technical. We were going to put $60,000 into it, and the Scottsdale market where this was located in full rehab condition could very easily sell for $850 all day long, maybe even $900,000 on this deal. So once again, stole this house, right? Just get a great deal. What I hear from the backstory, and I don't know if this is true or not, but the backstory that I heard was that the buyers on this property were New Yorkers. They bought the property in 2023. They realized they couldn't handle Phoenix heat, right? And so they packed their things and they were out of there by the second summer in 2024. And the house has been sitting ever since. They recently decided to sell the property. So they took a loss on the property. I'm picking it up from their loss. Going to do a small amount of remodeling on this property and sell it in the $800,000 bracket. And I was going to do it with nothing out of pocket. Unfortunately, in the last couple of weeks, the stock market corrected a little bit. The lender that was going to back the entire deal wasn't able to fund all of it for me. So he was only able to fund a portion of the property. I had to come up with the rest of it. And that put me in a spot where I was only able to fund the purchase price. I now got to figure out the rehab. So my point in sharing all of that with you is that sometimes what keeps people out of deals is the inability to come up with the capital or do the rehab. I'm a pretty resourceful dude. I'm relatively certain I'm going to get it figured out and find the capital or do the remodel. But for most people, that's the kiss of death. They can't buy the property and then come up with 60 grand, to go ahead and remodel it. So let me share my screen here so you can take a look at the Mitchell property that we just picked up. And Laura and I are super excited because we're going to be down there in Phoenix, not in the summertime. We're planning on residing down there full time, starting in the fall, and we'll be back and forth, spring to summer here. But here you go. Here's the property. And as you can see here, this is not what you think of when you think flip house, right? This is actually in really good shape. It's got a galley style kitchen. The flooring is nice. It's got a really nice pool out back. Check that out, right? Outdoor living space. It's got a grill. It's not in beat up shape by any means. The challenge with this home really kind of came down to the timing. And that's the key to being a good real estate investor, is being able to know the timing of the market and take advantage when the timing works in your favor. We most certainly did that on this deal, and it's going to pay dividends for us big time, right? Also, it's going to allow me to go into that market and start to learn more and get my construction crews set up, all the things that come into getting a remodeling operation. So by the time we're in fourth quarter of next year, we will be completely functional in that market, which is great for my clients because they can start doing deals in that market as well. All right, let's get back to this FHA program, okay? So this new program from the FHA is now allowing home buyers to pay for the remodel inside of the deal. And that in of itself is really cool. The 203K program is what it's called. And quite honestly, it's been around for some time. That's not super new. What is new is now they're allowing people to finance in up to 12 months of the payments on this property. So not only are you getting a stellar deal on the home, you're also going to be able to not make payments on the property for a 12-month period. Now, that's not free money. Okay, what they did is they rolled the loan amount. They rolled the payments into the loan amount. So you're going to pay for it later on. But if you're buying a great enough deal where you can finance in repairs and payments, like I was financing on this deal on Mitchell, then this is actually a huge opportunity for lenders to take it for borrowers, normal people, not investors who need the $50,000 in down payment, but people who can come up with a 3.5% down payment on the property, which on an average house here in Colorado Springs at about $400,000, we're talking about 12 to 15 grand down. Then they can finance in as many of the repairs as still allows the property to be viable financially. Okay, so if you need 50 grand and you bought the house cheap enough to wrap in 50 grand, you don't have to come up with those repairs. You have a draw process that as you complete the repairs, you're actually going to be able to show those repairs to the draw manager, and they're going to give you the money to complete the property as you're getting it done. So here you are, the requirements and guide just a little bit. This is not exciting stuff from a visual angle, guys, but the loan program simply allows you to finance in the repairs. The big add-on here is that you can now add in the 12 months of payments into the deal, allowing you to build out the payments, and your payment's going to go up a little bit as you're adding in those payments, but it allows you to do your remodel, nothing out of pocket. And whereas that is a really tough deal to put together in the private space in general, right? Getting a deal where you can finance in asking price plus remodel, that's normal. Like we can do that quite a bit with the down payment, right? Then you start adding in payments. That's where it gets kind of dicey. Most lenders don't want to do that. But the FHA, backed by the federal government, is now willing to let you finance in the repairs on your property. Give that some thought, okay? If you've been thinking about doing a deal but don't have the 50 grand down to do this as an investor, this program could completely change your life right now. We could find you a deal, right? And I would find the deal. And when you're part of the system, we could finance it using FHA financing with only 3.5% down, as long as you're agreeable to live in the property, okay, while you're getting the work done, or at least start living in the property later on in the process, right? And then you can actually build the repairs in so you don't even have a payment on it for up to a year. Just think about that. A year of no payments while you're doing the deal. Guys, this is absolutely incredible. And there's going to be so many incredible foreclosure deals hitting the market in the months and year to come. I got to tell you, if you're not looking at this from an investment angle right now, instead you're just looking to buy a home, your mindset needs to be corrected. This is the opportunity of a lifetime to get into a deal at a decent interest rate, not even the hard money rates that we pay, make no payments for a year, and finance in the repairs. You simply cannot beat this deal. So what are the shortcomings of this process? Well, obviously you need the 3.5% down. That's a big jump from the 50 grand down you need to do a deal with as an investor, right? So that's a huge savings. You also need to work with what they call them HUD counselors. I'm thinking about getting my HUD counseling certification. It's not a long licensing process, but I may have that shortly. But we'll connect you with a HUD counselor, and then you need GC on the team to give you your bids and estimates and make sure that you're going to get enough money or be able to get this thing done to your standards, the way you want the property to look. This is not a flip program. This is designed for people who are going to live in the house for about a year or more, to make money and build equity, sweat equity on the property, literally, while they are paying for the remodel as it gets done, and you're not making payments while it's happening. You simply can't beat that opportunity, right? So a lot of people come to me and they go, Donnie, I don't have enough money to do a down payment on a deal. I have to let them go because I can't work with somebody who doesn't have the 50K down to do a deal. I don't want to take your money for the foreclosure profit system, find you a deal, only to find out that you don't have the capital to actually do that deal. Not good for business. It's not good for me. I know there's a lot of gurus out there who are just selling their education to the highest bidder, and they don't truly care if you can qualify to buy a loan or not. They just want to sell the education. I got to let you know, I am simply not wired that way. Okay. My goal and I have created the foreclosure profit system to allow for people to actually make a profit. I'm a financial advisor. I'm registered. I have my Series 65 license, making me a registered investment advisor. So my whole goal is to help people make money using real estate. This is a big difference than making money using stocks or bonds. And it's also very different from having a real estate license where I'm paid a commission to locate a deal. I have a markup on my deals, so I make money from finding you the deal, but it's not the same as commission where I'm trying to push the price point up. I want you to get it as cheap as possible, because the more money that you make on the property, the higher the probability is that you're going to do the deal again. So though I have a markup, I try to keep that markup relatively fair, so you still have at least a $25,000 profit on the deal, and hopefully a lot more if you make money. I just had a client a couple of weeks ago close on a deal where they made $65,000 in take-home profit. I want to caveat that by saying that is rare, doesn't happen often, but we just won under contract with another home where our target price to sell, because we're always very conservative on our back end target, was $435,000, and that would have made a $30,000 yield. They went under contract at $460,000 this week, so they should make about 50 to 60,000 on that deal too, right? So when this works, it works much better than expected. And when it works normally, you can average 25K per deal. But the challenge has been that a lot of people didn't have the money to buy it as a non-owner occ investor property because they were strapped for cash. This FHA program, the new 203K program, can fix that problem for you, meaning that normal people can come up with just the 3.5K down and don't mind living in the mess for a little bit, or transitioning from another property, can now buy a deal with only 3.5% down, finance in the repairs, and make no payments for up to a year because it's all going to be financed in. This opportunity is amazing, and I really hope that you will take advantage of it. Now, your concern is, where are we going to find the deal? Well, that's where I come in. Okay. My team is constantly finding the next best deal in the market. And you know how you can tell a property is a deal? If it's not in great shape. Okay. Brand new properties like the Mitchell property, the rarity on finding a deal where somebody's just letting go of a perfectly nice property is super rare. After all, if you know what something's worth, and it's in good condition, why are you going to sell it for less than it's worth? It's not logical. Well, there's a lot of panic sellers in the market right now. You've got, the Trump anti-Trumpers, the very heavily left people who are worried that Trump is going to crash the economy and are offloading really nice property for a severe discount just because they're fearful what the market's going to do. One of the things that Warren Buffett is famous for saying is, be fearful when others are greedy, and greedy when others are fearful. Let's say that again. Be fearful when others are greedy, and greedy when others are fearful. So now, if the people are afraid right now, there's a lot of fear in the market, which side of the equation should you be on right now? Well, obviously the greed side, right? You got to look at the fact there's a lot of fear in the market and capitalize on that right now. If you don't have the capital to get started, you don't have the money to put down, you can now use this FHA program. So you need less money down, and you can get yourself into a deal right now using the foreclosure profit system. And if you just have the down payment funds of 3.5%, you can actually do the deal, get it remodeled and fixed up, and then sell the property a year later. You got to own it for a little while, and still make a profit on the deal as long as you bought it right. Incredible opportunity. Okay. So I'm going to get off my high horse, guys, but man, if you're thinking about doing this deal, but just not sure how to get started because you don't have the down payment funds, I'll be frank with you. That's really the only reason not to sign up for the foreclosure profit system. If you don't have the money to put down, it makes no sense, like I said, to pay for a program that's designed to get you in a property. But now way more people can come up with 3.5% down than 15 to 20% down, which is the requirement for most of my hard money lenders. Okay. So a lot more people now qualify, and that means a lot more people can buy into these deals. I think the FHA is being very smart and offering this program at a time like now when they know there's going to be a shortfall of investors in the program. There's going to be a lot of people who want to buy their first home and are excited about buying fixer-uppers. Look at all the shows, A&E's Flip This House, all these shows that are out there showing people flipping houses. That created a whole generation of people who want to buy and remodel properties, but simply aren't sure where to get started. When I was a young agent, that was my target market. I was going after people who wanted to buy their first home, but as I end every show with, I encourage them, don't buy a house, buy a deal. And I would find deals on the market for them that had equity built into the property, allow them to fix the home up on their own and then live in it for a while or sell it at a profit. One of my clients bought a home for his family years ago. Tommy Yowsi is his name. And he flipped that property, made over $100,000 on his first deal after living there for a couple of years. He used that money to do a couple other deals. And now he's a home builder, which was his dream with him from the day we met. He's like, I want to use this money to build properties so I can create wealth for my family, give back to my church, all the things that you want to do as part of real estate investing. He's living that dream because he bought a deal on his very first one. I can help you to buy a deal too. I'm not a licensed agent. I don't do the agent side, but I'm working on off-market properties that are really dialed in profit-wise, can make you a ton of money in the marketplace once you get it listed by fixing them up. And now with this FHA program, you can put less money down, finance in the repairs, and even finance in the payments for a while you're doing the work. What an incredible opportunity. So that's our show for today. I'm super excited about this program. If you'd like to learn more, go to foreclosureprofitsystem.com. Let's talk about, getting involved in a deal. You can schedule a call with me. We'll hop on a call. No sales pitch. I am not going to convince you to do anything. I know I'm a fast talking New Yorker, but in the end, I really want to help people. That's my objective. And if you're looking to do a deal in this marketplace, this new FHA program can make it much simpler. With that, this is Donnie Corum, your foreclosure deals coach, thanking you as always for tuning in and reminding you Don't buy a house, buy a deal.